Assalamualaikum. Today I'm gonna present the common test FAR320 October 2018. So for the question 2 is explain briefly characteristic of intangible asset. So you can get it from the slide which is under recognition criteria. The identifiable, control, future economic benefits and cost can be measured. There is 4, but it's only need 2, so you can explain either 2. Just to briefly explain. So next is explain accounting treatment for the franchise on the year ended 30 June 2016. What happened during the accounting treatment 2016 on 30 June and 2018. So basically, all change Berhad is purchasing franchise at a cost of 500,000. So the intangible asset, this franchise is an intangible asset. It can be recognized as intangible asset because it meet the criteria from this of recognition criteria of intangible asset, and it has no useful life. So the useful life is indefined. So basically, on the time of purchase, there is the intangible asset is cannot be measured the useful life. So basically, it's cannot be amortized. So next on 1st July, so the 1st July, then the franchise can be valued. So based on the fair value, the franchise was 450,000 and identified that the economic life has been limited. So basically at 2015, the company stated that the franchise is indefinite, but on the 2017, the company limit is only for 9 years. So it have to be amortized based on the tangible asset is measured using the valuation model. So it's using the valuation model. Explain the accounting treatment. So basically, we just state that what happened during 2016 June and then June 2018. So basically, on June 2016, so we just record that the world change is recognized the franchise as an intangible asset at the cost of 500,000. And next is on 30 June 2018. So on the 30 June, it have to be amortized because of the sentence. Economic life has been limited to only 9 years. So it have to measured using cost model because there's no new new revaluation value yet. It's only valued on 2017 yet. At the end of the year, there is no valuing, so we're using the amortization to reduce the carrying amount to 400,000. Okay, next, how show the journal entries to record the transaction for the year ended 13 June. So basically, on 1st July, the carrying amount, no, not the carrying amount, the fair value is 450,000. But then, at the end of the accounting treatment, which is 30 June, the franchise already have been amortized. So we just record the amortization of the amount of the franchise in the journal entry. And then the next accounting treatment is amortization. Okay, so let's go to on 1st January 2017. Beauty Berhad invest 300,000 in research and development to invent new cream product for skin. The cost is to search for the new product. So basically, this is the research value available in the market. The company invests more from July 2017 to December 2017 by 100,000. So basically, this Pharma Beauty invests almost 400,000 just to just to do the research. But this one is in the 2017 until, let's say, which the company financial year end, okay, 31st March. So basically from 1st January to 31st March, the former beauty spent 300,000 for the research, and they spend more 100,000 for the next accounting period. Okay, so the further cost incurred for the development was 500,000. So this one you can record in the soft P, because research is under written off in the software, and development is written in the financial position, statement of financial position. For the pilot sample which received good feedback, the company registered the patent by March 2018 at the cost of 120,000. So patent is an intangible asset and it can be recognized, can be measured. The company financial year is at 31st March. So compute the amount of intangible asset to be recognized in 31st March. So basically the only intangible asset here is patent. The amount of intangible asset to be recognized is in 31st March is the patent, which is cost 120,000, and as I said, the development also need to be recognized as intangible asset, because on this criteria under development, in here, research is originally and planned investigation undertaken with prospect gaining. This is for research and this is for the development. You can refer it to the slide. So should it be capitalized? This is the definition. This is the explanation why research don't have to be capitalized and why development costs need to be capitalized. Okay, so next, prepare the extract of statement of profit or loss and statement of financial position as at 31st March and 2017 and 2018. So basically I'm recording it this way. So research cost is 300,000, which is here. So how to record it in the extract is as at 31st March. There's only from a beauty Berhad only invest 30,000, so it goes under administration expenses, which is 30,000. And the next new accounting treatment, next accounting period is under 2018. The Pharma Beauty also spent another 100,000. The company invest more, 100,000 in January. It means the next accounting period. And next is soft P, statement of financial position. There is no recognition on in soft P in 2017 accounting period until 31st March 2017 accounting period, because this one is just recorded in the statement of profit and loss, 300,000 and 100,000. So when it should be recorded is the next accounting period, which is 31st March 2018, where patent and development, then it will be recognized in the statement of financial position under 2018 under non-current asset, because patent and development cost is not current asset. So that's all from me. Thank you for watching.
Assalamualaikum. For this video, we will discuss on Common Test October 2019, question number 2 on intangible asset. For question number 2, part A, an intangible asset can be recognized as an asset if it meets the definitions of intangible asset, which is an identifiable non-monetary asset without physical substance. Briefly explain the criteria of identifiability according to MFRS 138 intangible asset. In identifiability, there are two aspects that we need to consider, and it needs to fulfill either one of them. The first one is separable. Separable meaning to say that it is capable of being separated from entity and sold separately, or transferred to another party, or licensed the intangible asset, or rented or exchanged, either individually or together with a related contract. Or another aspect is it is arise from contractual or other legal right, meaning to say that identifiability is separable or arise from contractual or other legal right. So the answer should be like this.
Next, I will explain question 2b. The first one, we are required to explain the accounting treatment, so we have to find whether the intangible asset, which is the customer's list, are deficit or surplus. Before that, we have to find the accumulated amortization by dividing the cost of 250 with 5 years of estimated useful life. Then, multiply with 3 years from the day Labu Sayang Berhad acquired the customer's list to the year-end of financial report, which is 1st January 2016 to 31st December 2018. The carrying amount will be 100,000 and then compared to fair value of 80,000. Since the carrying amount is more than fair value, 20,000 deficit will expense off in the SOPL. Next, we will go to number 2. Journal entry for amortization of customer's list. Debit SOPL, credit amortization 50,000. Next, deficit revaluation, debit SOPL, credit customer's list 20,000. Lastly, elimination of accumulated amortization, debit accumulated amortization, credit customer's list 150,000. Thank you.
We move to part C. On 1st January 2018, Aman Berhad acquired a franchise for 5,500,000. It has legal life of 4 years and renewable at the end of every 4 years, and the company intends to renew it indefinitely. The fair value less cost to sell as at 31st December 2018 was 4,800,000. The question required to explain the accounting treatment for the franchise for the year ended 31st December 2018. So the answer for this question is on 1st January 2018, the externally acquired franchise is recognized as an intangible asset at the cost of 5.5 million. Since the company intends to renew indefinitely, the intangible asset is not amortized. However, the intangible asset need to be tested for impairment annually or whenever there is indication of impairment. On 31st December 2012, the fair value less cost to sale of 4.8 million is compared with the carrying value of 5.5 million. Since the carrying value is higher, then the difference of 700,000 is charged as impairment loss in the SOPL.